Hi, Alan and Veronica. Today's May 7th. Let's get going with today's fit.
There was a couple of things that kind of caught my attention. The first is this Financial Times article from a guy called Simon Cooper, who I like to read his articles. He comes out with not necessarily finance stuff. He's not a financial journalist. He's more a kind of social economic journalist. And he actually has written football books, which is one of the reasons I know him. Soccer books, if you want to call it, but football books for our Russian audience. And actually, what you may have heard, I don't know if it's reached you guys, something called the European Super League, which was this intended breakaway by 12 of the biggest European clubs. And it all kind of fell apart after 48 hours.
Yeah, it made news last week.
It all fell apart. Huge fallout because of that, and it's been analysed from a sporting point of view, from a financial point of view, from a political, economic point of view, blah, blah, blah. So, but it was interesting because he makes the point, Simon Cooper makes the point that out of those 12 clubs, 4 of them were heirs to a fortune. So they're basically millennials, if you want to call it. They're not, some of them are not that young, but they're all heirs to fortunes of fathers who bought the clubs, basically. Mm-hmm. And actually, they're heirs to fortune. And there's a 5th guy that was actually given the club by his father. So the father never owned the club, but he's been given the club. He's 29.
I heard about him. Yeah.
Right, Stephen Zhang. So anyway, that was a kind of an interesting point to it. But what it brought into was a bigger discussion about millennials and actually about succession planning, about inheriting wealth, and how that affects people. We're not just talking about oligarchs. We're not just talking about billionaires. We're talking about a major transfer of wealth from the baby boomer generation, mostly in America, but obviously in Western Europe, it has some effect as well, specifically the UK, of the post-war generation, basically, who inherited ruins. In many cases in Europe, they did inherit literal ruins. In America, it wasn't so bad. Obviously, it was never really America was never attacked, apart from Pearl Harbor. So it's basically about wealth building from there, and that transfer of wealth and what effect that's had on people, what effect it has on the boomer generation, but also in the millennials. So basically, if we look at more and more millennials are waiting to inherit, and I had to read this 2 or 3 times, Chris and Veronica. I had to say this: $68 trillion in the USA alone will be inherited from the boomers to the millennials, and they will create something like 618,000 new millionaires in America alone. Yeah. And that will come between now and like 2030, 2040. A lot of ramifications for us where people should invest for best chance of gains, but also the financial planning part is actually dealing with succession planning and dealing with transfer of wealth. I actually read quite a lot of Piketty, Thomas Piketty, or Thomas Piketty, depending on how you want to pronounce it, this week, and his book, Capital in the 21st Century. And he makes a couple of interesting points. When asset prices outstrip wages in developed economies, result in inheritance society. The past devours the future. Really powerful quote. And actually, the point he was making was the boomer generation, they were the lucky ones. The boomer generation. So they made all this money, the stock market growth over 50 years, property values increasing, no real wars. Vietnam, okay, but not really a devastating world war or devastating wars that we've had in Europe and in other parts of the world. What his point was that the boomers were the outlier.
They're the exception.
The exception to the rule. Because every generation before that, most of the wealth had not been made by that person, they had inherited it. Whereas the baby boomer generation, most of it is what you could call self-made, mainly because
they worked, they earned, they saved, and they created wealth.
And so I think that's quite an interesting way to look at it. Basically, what's happened recently, though, is boomers, they may want, because of uncertainty, partly because of the pandemic, but baby boomers may want to stay in their jobs longer, because they're not sure they've saved enough. They're not sure what's going to happen, so they want to stay in their jobs longer. That's obviously making them keep wealth for longer, and also depriving Gen X or millennials from actually moving up the hierarchy chain, if you like, in terms of jobs. So they don't become the executives of a certain company or whatever, because the board is full of 70-year-old white men.
Seniority gets difficult to
right,
attain.
And one other aspect which kind of comes into AVC's realm as well is boomers are not sure but able to afford long-term health care and care homes, in particular private health care homes. So they're worried about the finances for that. On the other side, you've got problems for millennials. This is very interesting because there's 2 or 3 articles, Chris, that you could bring up. The one in Wealth Advisor, there's also one from Forbes, and it's basically creating problems for millennials. This is why I know you and Veronica have strong opinions on this. That is not driving ambition. It's harming work ethics. Millennials drift into aimlessness. They become irrelevant. It breeds inferiority complexes, basically and they don't want to do jobs that will give them a salary which they basically don't value because they're going to inherit, $1 million from dad. Piketty calls it the rise of the petit rentier, the little rentiers. So basically families producing income mainly through property that don't have to do anything. And that, he argues, that's bad. And that's an increasing, because it's a compounding effect. What we're seeing now, and in the last 2 years, really, because of the pandemic, is people at the low end of the income scale have really struggled. In many cases, lost jobs, furloughed. In some countries, they're lucky if they get paid on furlough, but in Russia and other countries, they don't really get that. And then you've got the people who have already the money, the middle class, upper classes, who can work from home. They've got comfortable homes to work from. They don't have to travel. They don't have to put themselves at risk. They have savings that have grown really well over the last couple of years. And that gap between those two, that's a schism now. It's a huge gap between the little rentiers, as Piketty calls them, and the others. I wanted to leave with one, before you guys jump in, I wanted to leave with Cooper in the Financial Times, one last quote, which I really liked, when he was talking about nowadays people in those jobs find themselves living in their childhood bedrooms, struggling to please lesser educated parents who control their pot of gold. So they've got to be nice to their parents, but they're frustrated because they're more educated. He calls it that the bachelor's degree has become the high school diploma. If you were a teacher, bank manager, or somebody of even a lawyer in some instances, that was a guarantee of a good future, a good job, and a good house. And that's not what you get in those jobs anymore. They're not well enough paid in some places.
Right. Most places. Teachers for sure. Most places. So bank managers for sure. Yeah.
Yeah. As I said earlier, Chris, I don't have a conclusion to this. I think there's 2 things that we have to take out as financial advisors to this, is that we need to be cognizant and we need to be aware of these issues. Because I think it's Simon Cooper that makes the point that inheritance basically can rip apart families. I mean, it's a contentious issue, especially if there's 3 or 4 or 5 of them all looking to inherit. They're all jockeying for position. Right? And also, where would we put our money that can? I mean, that's why we like healthcare. Actually, you've got a huge wall of baby boomers that are getting elderly. They need drugs.
That's where they're going to spend their money on. They're only going to spend
and long-term healthcare.
They have houses and cars and, as you say, even jet airplanes. And what's important for them becomes healthcare. How do you get good healthcare? Yeah. How do you fight cancer for years? And I've seen that in some of my relatives. A lot of their wealth goes towards paying for specialized doctors and treatments and experimental stuff that maybe even insurance won't cover if you're wealthy. Yeah. So this is a great topic. Actually, I didn't know what we're going to talk about today, and I have 2 things I wanted to bring up. And
we've been talking about this all week.
We've been talking about this all week. So one of the big things in the news this week was Mr. Buffett and
Charlie Munger
Charlie Munger. And
the sprightly 90-year-olds, 90 odd.
Right. So I actually watched some of this. Have you seen this, Alan? This was incredible. Watching a 97-year-old and a 90-year-old talk about investments. And the criticism they got. Forbes, after a decade of underperformance, Warren Buffett should retire on top.
That's quite a wow.
Economist. These are not small things. Warren
these are
step aside for his chosen successor. Yeah. Because Charlie Munger slipped up in this thing, and he said this is the guy who's going to replace Buffett. And then they're like, well, why does it come up as like a tweet? Are we following the tweet your way to a promotion or demotion? Everybody's saying now's the time, jump. You've underperformed for years. If you didn't have Apple, your stock portfolio is full of mishaps, whether it was airlines or
and Apple is not a stereotypical Berkshire Hathaway stock.
You bought Apple, and that's that's kept everything else afloat. You made some insurance mismanagements, airlines mismanagement, and then this thing with the Hunt family or whatever. So there's all kinds of criticism of this, which again leads me to thinking, okay, how do millennials, people a little bit younger than myself, look at Warren Buffett? The whole time I focused on Warren Buffett, I'm looking for slip-ups in, is it hard for him to remember things? Is it hard? He lost some papers. He was shuffling through papers. And I'm thinking, does he have any signs of dementia? That's all I'm focused on when I watch this.
90s though. I mean,
it's kind of a crazy.
I think they're amazing.
It's still sharp. Yeah, it's amazing.
I mean,
sharp,
amazingly sharp.
Yeah. So Charlie Munger came out with one of the most interesting things was his quote about Bitcoin and about just in general, I think about cryptocurrencies, where he poses himself really against the millennial mindset. So what are the millennials doing? They're trading, and I'll show some statistics in a minute about how much activity is around cryptocurrencies and what's going on. Whereas these 90-year-olds are saying, of course, I hate the Bitcoin success. I think modestly that the whole damn development is disgusting and contrary to the interests of civilization. So this is a great talking point, I think, for all investors. Is you see certain cryptocurrencies, I think Dogecoin is up over 10,000%. Does the stock market hold, and as an advisor, this is the question I constantly pose, is does the stock market hold any value, any real interest even for millennials? Is there really anything interesting in it that isn't just, that's just a boomer thing to do? We're going to do Wall Street.
It's a game. It's a game for millennials. Where it's a game.
To them, it's a game. And I'm going to just look at some of these statistics now. Trading cryptocurrency markets has boomed since Q4. You're talking about monthly volume in major exchanges just on cryptocurrency, billions of dollars. So $1.5 trillion already first month of Q2 2021. Also, the great measure of crypto sentiment is the amount of tweets by 60 plus prolific tweeters in the crypto space. So they're tweeting about this all the time. The amount of mainstream media has, Bloomberg, CNBC, Fox, everybody is talking about cryptocurrencies. And yet the price of Coinbase on the stock market, it has retreated to, its IPO level. And really, there's really skepticism about how cryptocurrencies are really going to take part in the future of the world economy. The Economist came out this week. This is their cover story, actually, from The Economist. Digital currencies matter. And they're talking not about digital currencies like Bitcoin and Ethereum and some of these other Dogecoin or whatever, but they're talking about there's something that's going to wipe this out. There's something that's going to wipe out. I think they
call it Gov coin, right?
Right. So one of the things.
GovCoin, government coin.
GovCoins. So, but before we go there, look at what the Bank of England said yesterday.
Andrew Bailey.
Today he said, cryptocurrencies investors should be prepared to lose all their money. So when the Bank of England is saying this, and you hear similar things from federal governors and stuff, and they're talking about digital currencies, they do have a way to say, we're not only going to join the digital currency revolution, we're going to be the digital currency revolution. We're going to create it. We're going to squash everything else, because there's certain things that the government simply cannot allow. And that's loss of monetary policy. They cannot lose the effect on creating interest rates and stimulating the economy through a currency. So they're going to do this probably in the near future. There's talk of a Chinese currency already, and
Bahamas, they say, has already government coins.
So these gov coins are going to come out. And really what's amazing is they're saying the big effect is going to be on Visa, MasterCard, PayPal, and payment systems that are going to, every time you use your Visa or MasterCard, they collect 2% or whatever. If you have a card from the Federal Reserve with your money in it, you don't ever have to pay these fees anymore. And so all those companies are under, and banks themselves will be under a lot of pressure in the next 5 to 10 years as this ramps up. If you think about why Munger is talking, you begin to understand why central banks and why governments actually feel that way. It's not just some old kind of curmudgeon with his opinion, but they're actually worried about the future if it gets out of the control of governments. you're going to have an anarchist society. Just a great kind of thought-provoking conversation I had with Veronica this week about this.
I just can't see. I think there is a place for cryptocurrencies. There's a place for blockchain, but Bitcoin as a global currency compared to, as a proxy for gold and as an alternative, as a competitor to Federal Reserve and the dollar, that's too much power. They're not going to give that up for free.
No,
I mean that's a war. I mean, if Bitcoin was a country, the America would be bombing the hell out of it right now. That's how I feel.
Yeah, I mean, this is really interesting.
There's 1 trillion in Bitcoin right now.
Right, they're not big enough. That's nothing yet.
Yeah, it's still not big. Yeah.
Mm-hmm. The other thing I quoted this morning to Veronica, that I read something in Forbes last week or Financial Times last week, that if Bitcoin goes from, say, where is it, between $50,000 and $60,000 right now, and it goes to 200,000, so a quadruple, we will double the number of billionaires on the planet. And of course, over 50% of those new billionaires will be cryptocurrency related. The amount of cryptocurrency billionaires right now is pretty astounding. You have this 28-year-old vegan sitting in Hong Kong.
A lot of people and industries embracing it, so it's not that. It's non-fungible tokens. It's just going in all sectors.
The end game is coming though, Bram, with the governments. They will start really developing their own stuff, and also just putting limits on.
Outlaw it. I don't know how they can outlaw it, but they'll try to outlaw it. What's
interesting is this is where the millennials are engaged, and this is where the money is right now. And we saw that with SPACs last year. We saw that then this year with GameStop and these Wall Street bets, and now it's the Bitcoin thing, and not only Bitcoin but some of these lesser known currencies. But quite interesting stuff. Yeah, I think that's. Vron, did you want to add anything this week, or you want to talk about taxes or something?
Yes, it's on everybody's mind right now. We have a lot of questions from investors and clients and consultants about what to file and when. We had several webinars on that topic, and another webinar we're going to have on May 12th. We're going to talk about tax reporting, especially for foreign account holders. Before 2020, we, as investors, in Russia, we had to file taxes on accounts open abroad, on bank accounts opened abroad. Then brokerage accounts were also mandatory for filing taxes on. And only in 2020, we have a situation where life insurance policies are also part of the...
they're included.
Yeah, they're included in the tax filing. But the good news is that those people who opened the accounts before 2020, opened the life insurance policies before 2020, they do not have to notify the tax authorities. They just have to declare taxes with application, and they have to show the surrender value of the policy, not the actual value of the policy. And the date is June 1st. On insurance policies, on the foreign insurance policies, all we have to show is the surrender value. And the other thing I was going to point out, how ridiculous are fines if you do not file those taxes, or if you do not notify. They're like 1,500 rubles to 5,000 rubles, but still most investors, of course, prefer to file taxes and notify tax authorities.
So if not, though, this is one of the most lenient fines you'll ever pay in your life. It's, I think, more difficult to pay something for a traffic fine or something in Russia. Anyways, yeah, let's suggest that everybody joins us on May 12th, right, Bram?
Yeah, May 12th. We're going to talk again about taxes and in
Russian.
particular, taxes on foreign accounts and how to file those taxes.
Okay, later on this weekend, Veronica and I are going to do an English version, an update of our model portfolios and talk about what happened in May. There weren't any changes, but we'll just talk about how they performed in April. That'll be published on Monday on our website. And until then, have a good weekend. Bye-bye. Thanks, Fran.